The screen visible? Am I disconnection last time? I hope it's clear now. Let me put out this question out. Uh, no audio. Is my screen visible? Am I audible? Hello. Can someone confirm me? Yes, yes. Hi, hi, hi. So I hope my screen is visible and I am audible. Uh, so can we start? We have a good number of people on board. How to efficiently use the scanners and screeners to find stock position intraday. It will confusing and taking time. See, we cannot jump into the topics. We will refresh the page. We will cover what is been planned to cover. Okay. No audio. Problem. We will wait for a minute. Okay. Am I not audible? I don't see any problem in audio signal here. It's green. So okay. I think it's fine now, right? Is it fine now? Yes, yeah, perfect. It was on a mute, not mute. The broadcast was not yet started. I hope it's visible now. Perfect. Yes, will not. Okay, with already wasted 5 minutes of time. Without wasting much time, we'll get into the topics. Okay, agenda for the class today. We're going to cover what is the different type of trading in Indian equity market. I mean, Indian share market, different kind of trading, and what is the capital required in for each kind of a trading, and what is the risk involved in each kind of trading. What is the profit we can expect in each kind of investment and trading. One, that's a basic difference between what is a future trading, option trading, all those things. Followed by we're going to cover what is how do we use the stock edge app efficiently. Okay, these two would be covered today. It will take a good amount of time, at least 2 hours of time. uh, so that's the agenda for today. Okay, we're not going to teach the complete what is future trading. We're just going to teach what is the capital involved in each kind of a trading. Okay, I hope my screen is completely visible. Now let me quickly go to a spreadsheet. Okay, guys, I may be covering a bit fast. If you have any doubts, of course you can go back and watch one more time. I'll be explaining it very in a clear detailed term. If you watch once more, you'd be able to understand the difference. This is for the people who are just newly into the market. Okay, for the people who are newly into the market. So we'll cover this till 9 o'clock. We'll take one good hour for this, complete this. Rest we're gonna cover it 9 to 10. We're gonna use the stock edge application, or the good application, which you should start using it right from today onwards. Okay, fine. If we can we start, guys? Can I get a go signal from you people? Can I get a go signal? Cool, fine. Okay, because this is not so much important topic, I would not be covering much time on this. Okay, I'll be going as fast as possible. It is very basic, only for the people who does not know. I'm covering for those people. Okay. In Indian market, we do trade in equity, okay, and derivatives. Okay, two kind of trading which happens in Indian market. So everybody is aware of it. I hope everybody knows about this, which we call it as equities and as well as derivatives. Let me make this chat window smaller so that I don't miss anything anything important chat. Okay, fine. Let us put this equity. Okay, now uh, when we talk about equity thing, uh, okay, let us know what is the difference between equity and derivatives. In derivatives, there are two kind of things: futures and options. Okay, these two are there as part of derivatives. And equity, it's only called as, we call as equity trading or a cash trading or a delivery based trading, or whatever it is. Okay, fine. Now, what are the difference between these different type of trading? We'll take first equity and, okay, we'll take equity here and derivatives here. We'll take option later. Okay, we'll take option later. Is my screen is visible, right? Somebody is telling my screen is not visible. Yes, perfect. So please reply back somebody on the chat. It's visible. Okay, first I'll cover a bit fast, but you'll be able to understand it. If not, you can have always go back and look at video once. Let me put the voice low. I think it's too high. Okay, I think now it's clear. Okay, okay, I want to make it increase voice. Fine, let me increase it to higher. Is it audible now? It's audible now. Perfect, fine. Okay, first difference: buying. Okay, yes, yes, we can both buy and we can both selling happens here. Both the things we can buy, both the things we can sell. There's no difference between these all things. Next difference: size. No size. Okay, in equity trading, you can buy any number of shares and sell any number of shares. There is no restriction by the NSE, by the exchange. We can buy, say, we're not looking into a larger picture like 1 crore, 2 crore shares. For our kind of a trading, we can buy 1 share, 10 share, 1,000, 10,000, 1 lakh shares. There's no restrictions. How do we buy derivatives? Derivatives are bought in lots. Okay, options are bought in lots. What is lots? We will cover separately. Okay, we'll make a note of it here. Now, sizes. Now we know to know what we have to, we can buy in intraday. I mean, we can buy any number of shares in equity, but future you have to buy in lots. Same thing selling also. Holding period, no limit. Okay, so you can hold shares 1 year, 2 year, 3 years, 4 years, 5 years. We can hold it. We don't need to worry about 30, 40 years. For our trading, we can hold 5, 10 years shares, no restrictions. But derivatives have to be sold. Derivatives called as contract, to be sold on same month, or the contract whichever you buy. Okay, what is contracts? We will look into it. And expiry of contracts, we will look into that later. So as of now, holding period, you can hold any number of month, time, year. Derivative as well as options have to be squared off, nothing but sold off in the same month or the expiry month which you buy the contract. Usually contract are sold between 3 months advance. Okay, can I short sell? Yes, intraday. Okay, I have increased size. Okay, can I short sell? Yes, intraday. and no for positional. Okay, no for positional. In derivatives, can I short sell? Yes. What is short sell? Selling of shares without holding shares in our account. Can I short sell intraday? Yes. Can I do a positional short sell? Yes. Same for this also. I hope this everybody is clear on this. There's no doubt about what is short selling. Okay. Again, when I have to square up the shorting in the same month of expiry, whenever you have bought for whichever expiry you have bought. I'm not looking into the mobile screen. I'm looking into this chat. So please do reply on this chat alone. Don't reply anything on a mobile. I'm monitoring the screen with the chat window open. Okay, short sell. So short sell intraday, yes. In equity, you have to square off the same day, the day we are short selling the cash market. Derivatives contract and the option contract can be taken to the next day. Can we short sell more than one day for future stocks? Yes, that's what I said. You can do a positional short sell. Okay, positional short sell is allowed in derivatives till expiry. You have to buy back within expiry. Okay, done. Next, what else difference between these two? STPT is not possible in equity. Okay, it's only possible in the futures. The stocks which are in futures, that is only possible, not on a cash stocks. Okay, only FNO stocks are allowed to cover it up, not cash stocks. Derivatives are allowed. Okay, next, what else difference is between these two? And this is the major difference, guys. The major difference of between equity and cash markets are there's only okay ban period. One more thing, no ban period for equity, allowed in these both. So if the any securities is under ban period, no, you cannot positional short on equity. It will not be allowed. If you short it, you have to short only futures, FNO stocks, futures. Okay, you cannot. You have to do only that. That's why we always say, do not go for STBT. Always go for BTST. Okay, ban period means if any securities exchange, the overall open positions of the allowed security crosses more than 95% of the holding, it is called as market wide position limit, which the securities goes under ban. For example, if the company allowed to do a trading of 100 stocks, if 95 stocks have taken by the positional by all the people, 95 stocks have taken, then 95% people held by the people, then the securities will go on a ban. If the security is on ban period, you cannot take a fresh position. Okay, you cannot take a fresh position. However, you can always close the existing position. Okay, you can always close the existing position uh, when it is ban period. Okay, in ban period, no seller, no, you cannot, I said you cannot create a fresh position. You cannot buy a new contract or you can't sell a new contract, but you had existing contract, you can always close the position. Okay, it's clearly explained over here. You can let's have a look at it. I said you cannot create any fresh position. Simple straight answer. No fresh positions. No fresh positions. Can we short 10 shares of FNO stock? You can short. No, nobody is selling not to short. Intraday shorting is allowed. No carry forward of shorting on a cash market, cash stocks. It not be allowed. Okay. It will be auto squared off by Zerodha or whatever platform using by 3:15 p.m. if you do not close. Any maximum limit for the ban period? 95%. For example, if the 100 stocks are allowed for trading, if 95 is taken delivery, 95% is taken delivery, until this position comes down, you cannot, stock will not be out of ban. Okay, Rajat, I will take care. Okay, let us finish the topics first, then we'll take a last doubts. Okay, okay, fine. Now, what is a ban period? Is a major difference between equity, derivatives, and options. So let us finish these topics. What are lots? So every company is being fixed into a different kind of a lot where you can purchase in terms of lot. Around 250, 265 stocks are there in future and options. Okay, those stocks can be purchased in the uh, terms of lot. Okay, terms of lot. I'll show you. So you can go to the futures and options in Zerodha margin calculator. No, equity futures. You can go for this particular page. Here, every stocks is listed, which is in futures and options. Okay, futures and options, and you can always look into the lot size of each stock. ACC is a lot size of 400. The same lot size will also appear in an option trading. Okay, so Adani Enterprise 4,000 lot size, Adani Power 20,000 is lot size, Ajanta Pharma 5,000 lot size, and Allahabad Bank 10,000 lot size. Okay, so what are the ban period ban stocks for today? You can see here under ban for today are Dish TV, Fortis, GMR Infra, HDL, Jet Airways, Jindal Steels, JP Associates, and Arcom, Reliance Capital, Arpal Workforce. These 12 stocks are in ban period for today. Okay, ban fair for today. So if any of these stocks, if the people have closed their existing position, if the market wide limit position has come down below 95%, then these stocks will be out of ban tomorrow. Okay, it will be out of ban tomorrow. If not, again this will continue to be ban period for tomorrow also. Okay, you just go to Google it and browse it. You have a very extensive explanation of what is ban period. Have a look at the document. It's clearly available. If you have a doubt, NSA also gives an explanation, and the rest also give explanation. Just have a look at it. If you still have a doubt on what is ban period, we'll take up in next class. Okay, and then I told what is lot size. So lot size is different from project stock to stock. You can look into all the lot size over here in Zerodha. That's closes on this part lot size. Okay, done. What is contract? What is contract? Contracts are nothing but every stock, every futures can be bought in 3 months advance contract. This is January contract, February contract, March contract. The three contracts will be available for you to purchase and sell in a FNO stocks. Okay, 3 months contract. The volume will be high in this month's contract. Next month contract will be very low volume. Third month will be much more low volume. By the third week or fourth week of expiry, the volume will the next month contract will start picking up. Okay, this is called as contract. When the contract expires, every contract expire by fourth Thursday of the month. So in this case, we're having expiry on 25th of Thursday is the expiry. Okay, 25th of this month is expiry. So every fourth Thursday is the expiry of the contract. Currently, you can buy and sell futures in the month of Jan contract. By end of this week, stop trading in this month's contract. The volume will get shifted to a next month's contract. Then you can start using a February month contract. You can start buying it. It's the last Thursday. I mean, fourth Thursday, basically. You'll not get fifth Thursday. No, not fourth. It's the last Thursday of the month. It's not fourth. It is the last Thursday of the month. Okay, that is contract. I have some questions here. In Nifty, what does 18 Jan mean? 18 Jan means it's a January 18th contract. Okay, January month contract, Jan 18. That is all about contract. So every contract will have an expiry at last Thursday of the month. It is not 18th expiry 2018. We'll have a date on the expiry. Nifty will not have anything as Jan 18th. I said every contract will expire on last Thursday of the month. Be it a fourth Thursday, fifth Thursday, sixth Thursday, it will have a expiry. So if you can see, this is the expiry of 25th Jan. Next expiry is February expiry coming at 22nd of February. March expiry coming on 5 Sundays. One, two, three, four, 5. This is actually wrong. The expiry is 29th of March. They'll change it later. So March will coming as 29th of March. So every expiry will go towards the last Thursday of the month expiry. You cannot carry forward F&O stocks. If you short sell, you have to close expiry. Clearly mentioned, you have to close the same expiry. No carry forward. You can close it. You can open a fresh short in next month expiry, or a couple of brokers will give you a window where you can just pay the premium difference of these two expiries and carry forward your position. For example, if you are working on a Zerodha, let me show you. Expire is market closing hours. So suggestion, do not worry about how much they will charge. Will they charge anything money if I did not close the expiry? What do they charge? Okay. No need to worry about all those things. Do not carry forward your position till last month of expiry. That's all I could say. Okay. Do not keep your position till the last month of till the last date of expiry. If you ask 10 times also, my answer will be same. You cannot carry forward your positions in option and futures. Could be 28th of March is a holiday. If it is trading holiday, that is why they could have pushed it to 28th of February as a this thing. Okay. 1 minute, guys. Okay, I was explaining how can we carry forward. So let us go to a new window. Okay, if I take a new window, I'll take a like Infosys Jan futures, Infosys Feb future, Enfi Mars future. So if you look at here, Jan future, the volume is this much. February future, the volume will be very low. Okay, because people will not trade on that. But and if you want to carry forward the contract, the difference of 4 rupees, there's a 79 rupees, 83 rupees, difference of 4 rupees, you have to pay to a broker, and they'll give a window where you can convert the Jan future to February future. Is called as rollover window. You have to pay the difference of 4 rupees and carry forward a position, or else close the position in the month of Jan, again open a fresh position in the month of February. Okay. Option future expiry last Thursday of the month. Answer remains same. Every contract expires last Thursday of the month, except Bank Nifty. Bank Nifty will have an expiry every Thursday. Bank Nifty will have an expiry along with the monthly expiry. So Bank Nifty will be there. Okay. If I have to short sell the F&O stocks, we have to buy at future lots. Yes, you have to buy only lots. You can't do a 10 or 5 or 10 stocks. Is any brokerage saving low rollover? I have not explored that. Why you want to do so much of risk? Just sell it and buy it in next month. And don't buy if you're so not sure about that month contract. Always preferred, you can start buying the next month contract itself, because already volumes are coming in Feb month contracts. You can start buying February itself rather than waiting for a Jan month contract and getting the risk. Okay, that's part of it. Next is, okay, we'll close this part now. We'll quickly go to the what is the investment required for this calculation purpose. I would like to take any one stock. Anybody can say any stocks which you see the what is the difference between equity, positional, derivatives, and uh, okay, I'll take one stock. I got a couple of recommendations. Okay, I'll take DLF only. Okay, So DLF, I usually take this only. Okay, now 5, let us go to a what is the DLF. Okay, DLF stocks, the lot size is, guys, 5,000 rupees the lot size. Okay, 5,000 is lot size. I mean, let it be expensive and all, doesn't matter. We just need to see what is the difference between buying and selling. So for example, today is the date of, we consider the date as Jan 1st. Okay, now the stock we are looking at is DLF, quantity, equity. Okay, equity, DLF. Okay, now just watch it carefully. So lot size is 5,000, so we'll take 5,000 shares of this. Okay, and price is 265, 265. Investment required to buy 5,000 shares of this lot is 13,25,000 rupees. You required to buy 5,000 shares of DLF. I hope it is clear. There's no confusion. Okay, next. Okay, next. After 1 month, this is for example, I bought first of, we'll take the same expiry date, first of this, and the 28th or whatever it is this month expiry, 25th is the expiry for this month. So 25th of expiry, the stock price as, okay, this will say profit, this will say loss. Okay, the stock has gone up by 275 rupees. So investment has become, you got a profit of 5,000, 50,000, right? 50,000. Profit percentage, loss percentage. Okay, so end of 20th of January, DLF has gone up by this much, so you got a profit of so much. If the stock has gone down by 10 rupees, okay, you're making a loss of 265 has become 255, you're making a loss of 50,000. Okay, so profit percentages on this investment, you're losing a profit of, we're getting a profit of how much percentage? 4% on an investment is your profit. The same way, 4% on an investment is your loss. Clear? So you bought 5,000 shares by investing 1,32,500. By end of the month, if the stock price has gone up by this much, you'll make a profit of 50,000, which is equals to 4% of your investment. This is what you can returns you can expect in your equity investment. Okay, now you can say, I cannot invest so much into the market. What is the alternative available for me? That is futures. Okay, now in futures, to buy same amount of 5,000 shares, what is the investment you need? The investment you need to buy 5,000 shares is 1,68,000, maybe 1,70,000, we can keep on round figure. So you need investment only 1,70,000 to buy same amount of shares. So here what is my investment percentage? Okay, what is my investment percentage? I have 13 lakh. I'm investing 100% into market. I'm investing entire money into market. and I'm making this much of profit. How much I'm making a profit? 4% on my investment. Now if I go to equity, I mean, futures, I'm investing only 1,70,000 into the market. Okay, and if the stock price goes up by 10 rupees, I get 50,000 profit. If the stock price goes by 10%, 10 rupees, I make a loss of 50,000 loss. Okay, this is clear. Any doubts in this? So I can buy the same amount of 5,000 shares of DLF with the only investment of 1,70,000 investment. I can buy the same 5,000 lot of it, and the stock has gone up by 10 rupees. I made a profit of 50,000. 50,000. Yes, it's simple. I invested 1,32,000 rupees in cash market to buy 5,000 shares. But I'm a smart trader. I invested only 1,70,000 money and I bought same amount of 5,000 shares of DLF. Stock has gone up by 10 rupees. I got a profit of 50,000. Stock has gone down by 10 rupees. If you make a loss of 50,000 rupees. So what is the returns on my investment? My returns on my investment. Yes, that's what. You can hold your position of 5,000 shares of DLF with 1,70,000 pence until the expiry date. Okay, until the expiry date, you can hold it. So, and my total profit on my investment is 29,000, 29% on my investment. So, I'm making an investment of 1,70,000 rupees. My ROI is 30%. Then, how much money I'm investing? How much money I'm investing? So here I invested 100% of my capital. Here I'm investing only 12% of my capital. Okay, only 12% of my capital I am investing to make the same amount of profit which I'm able to make in cash market. So this is the difference between the cash market and future market. If you are able to predict the right move, you can double your money in no time. What brokerage? 20 rupees per trade. Simple. Don't confuse. No brokerage is 20 rupees per trade. Everything, whatever you trade, cash, equity, future, option trade. Done. No change in brokerage. It remains same. So here my investment is just 13% of my actual capital, but I'm able to make same amount of profit with the minimal investment. But however, if the stock goes down by 4%, goes down by 10%, here my loss on investment is 4%. However, in the same case, my loss on my investment is 29%, which is very, very high. So this risk I'm supposed to bear. If I'm able to bear the risk of 30% of investment, I can trade in futures. Okay, next. You have to put the stop loss same way as you put the stop loss for cash market. No change. You have to sell the position with the stop loss. Now 28th of expiry, the stock has massively gone down by 10%. I don't want to book a loss of 50,000. I will carry my position in cash market. I will buy, I will sell next month, after 3 months, after 4 months, after 5 months also I will sell my position. I no need to worry about squaring of my position. My loss will be still remain 4%. However, in the case of futures, I have to square off my position, square off my position before expiry. Okay, I have to square off my position before expiry. You can trade in cash. You can look into the cash charts. This see, there will be hardly any difference between cash price and future price. It will not be much difference. So doesn't matter what if you feel cash market is comfortable, you can look into the cash market, then take into futures. We look into only futures for Nifty. Rest all we analyze cash market. Ma'am has told you already. Okay. So in case of futures, I have to square off my position before the expiry. No matter what, I have to book a loss and come out of it. Okay, that is one. Next kind of a trading is it squares off automatically. They will put you a lot of charges on your DP account if you do not square off your position. What are the charges? Please call up Zerodha. They'll let you know, or browse it. They'll keep you posted. What are the charges? What is in case of options? Okay, now this guy comes to the market, say, I have a huge investment. I can invest this much. I can wait. I'm happy with the 4% profit. So he's happy. Big guy. Next set of person, he'll say, I want to buy 5,000 shares of DLF, but I cannot invest 13 lakh. I don't have so much of capital. Then for them, medium investment guy, he do in futures, so that he learn market, trade smart, make same amount of investment what that guy is making with the limited capital of 2 lakh. Now third set of people, whereas we are small traders, not small capital, where these people will say, sir, neither I cannot bring 13 lakh nor I can put 1,70,000. My capacity is only 25,000 rupees, not more than that. For those kind of people, again, they will buy one lot of DLF by paying premium of 5 rupees with the investment of 25,000 rupees. Okay, if they're able to predict the market at the right time, this 5 will become 25, and he makes a profit of 50,000. That is, you don't want 200%, maybe 10 rupees, 25,000 profit he make, 100% returns on his investment, and same 100% loss on his investment. The capital what he going to invest on his market is 2%. Okay, let me explain you once again this. In cash, you need full investment. In futures, you need only 13% on your capital to take same amount of shares to make same amount of profit. In options, you need only 2% of your capital to make a same amount. Maybe we can take this as 10 rupees also, 50k investment, and we can make it as 20, 50,000 profit. Okay, okay. This is much more clear. You need 100% of capital to buy, to make your investment. To get 50k profit, you need only 13% of your capital to make same amount of profit. You need only 4% of your capital to make same amount of profit in the market. Okay, in the cash market, you lose only 4% of your capital, manageable. In the future market, you lose 30% on your capital. I mean, on this example I'm telling, which is very huge. In the option market, if you come, you lose your entire capital if you trade on a wrong direction. Okay, maybe you can keep a stop loss of 50% when the 50% when the stock is going down. Still, the loss on your investment is minimum 50%. Okay, E17 does not have a right formula. Okay, we don't need, because investment is 50,000 rupees, same. Okay, and the premium which I bought at 10 rupees, the premium will become 20 rupees, then I'll make a profit. The premium becomes 5 rupees, I'll make a loss of 25,000 rupees. Okay, provided I'm assuming that we are keeping a stop loss of at 50% on my investment. If you don't put a stop loss, your entire capital will be wiped out. So these are the different kind of investment required for each kind of a trading. What is the risk associated with each kind of a trading? What is the profit expected out of each kind of a trading? Any doubts in any of these fundamental understanding between the difference of cash, futures, and market options? Quickly, within next 15 minutes, we'll cover all the topics, doubts, and then we'll move to stock edge application. Because we don't want to on these things. Okay. People wants Excel sheet. This is just an illusion, okay? But concept is same. Concept is same. It does not go anywhere. I mean, concept will not change. Okay. Which of these three having high STD charges? I am not sure. I haven't looked into all this. Look, you can look into Zerodha. You'll get an answer. I'm not worried about all those things. If you're making a good amount of profit, I don't mind. Okay, next question. Types of options are there difference? Okay, types of options we'll cover it later because we're not covering the option class now. We will cover it later. What happened when you take a position after the security goes ban period? You cannot take security which is on ban period. Broker will not allow you. What happens when you take a position after security? That's what I clearly explained. You can close your existing position, no restriction on it. You can close existing position, no fresh position will be allowed which is in ban period. Future can be exited anytime. Yes, it is as good as you can buy it now. After 10 seconds you can exit it. No restriction on buying and selling of futures. Yes, any questions are welcome. Any questions are welcome. Be it any silly questions are welcome, but it should be a valid question. Okay. What a timing factor option? We are not covering option class, so I cannot explain that, Shobna. It is not option class. It's just understanding of different kind of a trading. What is the capital involved in each kind of a trading? What is the risk involved in each kind of a trading? What if there's no buyers and sellers? Square of call put, then what? We can't do anything. It'll I don't know how it works. I never went to that kind of situation where I don't want to leave my option position at last day of expiry. I'll square off 3 days before itself. So I never got that situation to understand. Nanak, I didn't get your question. Please answer your question. I don't know. I could have missed out. Okay. How was script enter into a ban period? Google it. You'll get an answer. I already explained it. If security ban 95 is delivery, this means stock is a good position on equity. It's not a position on equity. The securities of future contract has been delivered 95%. For example, if the company allowed 1 lakh contract to trade, 95,000 contract people have taken delivery and keeping it holding because they know stock is going to go up. So they buy and they keep it on a hold. So until they sell it, the security will not be out of ban. For options also, can we buy and sell within month, right? You can buy this month, you can buy next month, you can buy after 1 month also. However, the volume will not be there and the premium will be too high in the next month contract. Can we take stock from any of these trading? Yes, you can take stock of these trading. If it is a ban period, you can do always in a cash market. There's no restriction for cash market. Please show me future stock. All the future stocks are available in the Zerodha. Here it is available. Just go to, or else just search list of FNO stocks. You get all the list of FNO stocks. Okay. You get list of all the FNO stocks. You'll get the list. The difference will be deducted every day from my account. What difference? What difference? I didn't get your question, Guru. See, if you bought the futures at 5,000, I mean 5,000 by paying 265 rupees stock price, you're paying 174,000 rupees. You paid and you bought a one lot of future. The stock price goes 1 rupee down, your value will show as minus 5,000. Your account will show. If it go rupees 2 rupees down, your value will go as 10,000 minus. Same case go the profit. And your broker will allow you to hold this position up to 80% of capital goes into negative. That means that if it goes 20 rupees down, 1 lakh gone. If it goes 30 rupees down, you'll be losing 1.5 lakh. So if your stock price goes up to 235, 30 rupees stock has went down, you'll be loss of 1,50,000 rupees. Your broker will automatically square off your position because he cannot bear your losses. Okay, he'll square off your position, he'll not hold your position. Can you explain the premium fixed for option? There's not an option class to explain premium. I've clearly told many number of times, no questions apart from the topic which is covered. Even though being so many times told, if people asking same questions, again it's waste of your time. I'll read the question, I'll not answer. Both the time getting wasted. Answer only which is to the topic. Before trading, which graph do we analyze? Cash graph, future graph, option graph. Cash graph, I told already. No future graph, don't analyze future graphs. Only two cash graphs. Can you please explain show how to put stop loss when buy options? Please refer Zerodha Varsity. If not, when the ma'am take a tomorrow live trading session, she'll be able to put your stop loss. She'll be able to show you too. It's same as put a stop loss and as you put for cash market, nothing change. Okay, liquidity script, there are not buyers or sellers in the call and put. Liquid scripts, there are not buyers and sellers volume in the call and puts. Do not trade on such kind of stocks where liquid is very low. Don't take any risk. Don't try to explore new things. Just try to use what is available. Why do you want to go to the stock where there's less volume? Why? Forget it. You have 250 stocks. Buy which has a good volume. Okay. In ban period, open position can be squared off when there's a buyer. In ban period, my answer is again same. You can close the existing position, be it a short or a long, you can close the positions. There's no restriction in closing positions. You cannot create a fresh position. Simple. If a buyer call premium 10 rupees and the premium goes down, how can I save my loss? Put a stop loss or exit the position. Simple. Do we need to hedging trade or option in future? Yes, you can do a hedging of option in futures. Ma'am will cover a hedging part. When the maybe Friday she'll cover the hedging part. What is good future? What is good future options? It depends upon how the risk appetite for you. If you can bear the loss of future option of 50% loss, you can trade in options. If you're able to analyze the good charting technique plus open interest and change in Y, you can work in option market. If you cannot understand so technical things, then you can work in futures. If you still not able to understand future, you can work in cash. How do you learn and trade? It's not which is good or which is bad. How far you're able to understand the market is the answer. When securities in ban, only future option also ban. When securities ban means future and option is both are ban. Security means it's both. Derivatives ban means both. Option, future, both. Option and future both to be square off before expiry. Yes, both. What is the upper circuit, lower circuit? No upper circuit, no lower circuit. You can trade. The price can go any number of extent. This 10 rupee, if you put a right bid, 10 can become 100 also. Okay, 10 can become 100 also. One live example today which I want to show. Nifty 10,900 call option which was trading yesterday at let it come 10,900 call option which was trading at 9 rupees. It has become 21 rupees, as good as 250% profit in a day. This one script has given Nifty 900 series. It has started with yesterday day graph. If you look at the day graph, it has closed yesterday at 9 rupees. 9 has become 8 rupees. Today morning opening hours, 8 has gone up to 20, 21. So almost this has given 250% returns. You could have bought today morning at 8 rupees, can sell at 22 rupees. You can make a good amount of profit if you're able to catch this spike. Okay, next. Can we check option chart? Yes, you can check option chart. You can check it. Okay. What is the upper circuit and lower circuit? Upper circuit, lower circuit. There's no what is upper circuit, lower circuit. We'll cover it later. Let us not bring that into this concept. We'll take it separately. Gobind. Nanak, I didn't get your question. Sorry. Okay, for trading in equity, one refers option data. That the trade options. What is the reference? Yes, that is true. We will cover it up when we take an option trade. Guys, ask any questions related to this topic. Please do not divert. Okay, please do not divert. Can we check option chat? Yes, you can check option chat.